Hey there, YouTube family. Welcome back to our channel where we help you make, save, and grow your money. Today, we're diving into the top 5 ways to invest your money in 2024 to maximize your returns and secure your financial future. So, if you're ready to make your money work for you, hit that like button, subscribe, and let's get started. Hey everyone, it's Brian here. Now with the economy constantly changing, it's crucial to stay ahead of the game when it comes to investing. Whether you're a seasoned investor or just starting out, these tips will help you make smart decisions with your hard-earned cash. Let's jump right into it.
First up, we're talking index funds. Look, I get it, investing can seem intimidating, but index funds are like the superheroes of the investment world. They make it easy and accessible for everyone to grow their wealth. Think of an index fund like a basket of stocks. When you invest in an index fund, you're essentially buying a tiny piece of all the companies listed in that index, like the S&P 500, which tracks the performance of 500 of the largest companies in the US. Now, what makes index funds so great? Well, first off, diversification. By spreading your money across hundreds of companies, you're minimizing risk. It's like that old saying, don't put all your eggs in one basket. With an index fund, even if one company doesn't do well, it's just a small part of your overall investment. And here's the best part: low fees. Index funds are managed by computers that track a specific index, so they don't require a team of expensive Wall Street hotshots. This means lower fees for you, which translates to more money in your pocket over the long run. Remember, even a small difference in fees can add up to a significant amount over time. Now let's talk about some popular index funds. The S&P 500, which I mentioned earlier, is a great option for broad market exposure. It's like owning a slice of the entire US stock market. Another great option is the Total Stock Market Index, which includes even more companies, giving you even greater diversification. Investing in index funds is like setting your money on autopilot. You're essentially hitching your wagon to the overall growth of the market, and historically, the market has always gone up over the long term. Of course, past performance is not indicative of future results, but it's a pretty good track record. So, if you're looking for a set-it-and-forget-it investment strategy with the potential for solid returns, index funds are definitely worth considering.
Next up, we're diving into the world of real estate crowdfunding, a game changer for those seeking passive income without the headaches of being a landlord. Imagine owning a piece of a skyscraper or a shopping mall. Sounds pretty cool, right? Well, with real estate crowdfunding platforms like Fundrise and Realty Mogul, you can do just that, all with a fraction of the capital you'd need to invest in traditional real estate. So, how does it work? These platforms pool money from individual investors like you and me to invest in large-scale real estate projects. You get to be a part of these potentially lucrative ventures without having to deal with tenants, toilets, or late-night maintenance calls. One of the biggest advantages of real estate crowdfunding is the potential for passive income. As a shareholder in these properties, you're entitled to a portion of the rental income, which is typically distributed on a quarterly or monthly basis. It's like having a second paycheck, but instead of working for it, your money is working for you. Another benefit is the diversification it offers. By investing in multiple properties across different locations and asset classes, you're spreading your risk and increasing your chances of higher returns. It's like having a mini real estate empire without the hassle of managing it yourself. Platforms like Fundrise and Realty Mogul make it incredibly easy to get started. They offer user-friendly interfaces, low minimum investments, and a wide range of investment options to choose from. You can invest in anything from apartment buildings to office spaces to renewable energy projects. Of course, like any investment, real estate crowdfunding comes with its own set of risks. The real estate market can be cyclical, and there's always the possibility of delays or unforeseen circumstances. However, by diversifying your investments and doing your due diligence on the platforms and projects you're considering, you can mitigate these risks and potentially earn solid returns.
Now let's talk about the wild world of cryptocurrencies, where fortunes can be made and lost overnight. Cryptocurrencies like Bitcoin and Ethereum have taken the world by storm, offering the potential for massive returns but also carrying significant risk. Think of cryptocurrencies like digital gold. They're decentralized, meaning they're not controlled by any government or financial institution. This has made them incredibly popular among investors looking for an alternative to traditional assets. One of the main attractions of cryptocurrencies is their potential for high returns. We've all heard the stories of early Bitcoin investors who turned a few $1,000s into millions. While those stories are certainly enticing, it's important to remember that the cryptocurrency market is incredibly volatile. Prices can swing wildly in both directions, so it's crucial to only invest what you can afford to lose. Another key aspect of cryptocurrencies is their potential to disrupt traditional finance. With the rise of decentralized finance, or DeFi, cryptocurrencies are being used to create new and innovative financial products and services, from lending and borrowing platforms to prediction markets. However, it's important to approach cryptocurrencies with a healthy dose of caution. The market is still relatively new and unregulated, making it susceptible to scams and manipulation. It's crucial to do your research, invest in reputable projects, and use secure wallets to store your digital assets. If you're considering dipping your toes into the world of cryptocurrencies, it's essential to start small and gradually increase your investment as you become more comfortable with the risks involved. And remember, never invest more than you can afford to lose.
Let's move on to the stock market, the OG of investing. Investing in individual stocks can be a roller coaster ride, but it also offers the potential for significant returns, especially if you're able to identify winning companies early on. When you buy a stock, you're essentially buying a small piece of ownership in a company. As a shareholder, you're entitled to a portion of the company's profits, which can be paid out in the form of dividends or reinvested back into the company to fuel its growth. One of the advantages of investing in individual stocks is the potential for high returns. If you're able to pick the next Apple, Amazon or Google, your investment could skyrocket in value. However, it's important to remember that stock picking is not for the faint of heart. It requires research, patience and a willingness to stomach some volatility. Another key aspect of stock investing is diversification. Just like with index funds, it's important to spread your risk by investing in a variety of companies across different sectors and industries. This helps to protect your portfolio from the impact of any one company's poor performance. When choosing individual stocks to invest in, it's essential to do your homework. Look for companies with strong financials, solid management teams, and a competitive edge in their respective industries. You can find a wealth of information on companies by reading their financial statements, analyst reports, and industry publications. Remember, investing in individual stocks is a marathon, not a sprint. It's important to have a long-term perspective and not to panic sell if the market takes a downturn. By staying disciplined and sticking to your investment strategy, you can increase your chances of success in the stock market.
Finally, let's talk about bonds, the reliable workhorses of a diversified investment portfolio. While they may not offer the same potential for high returns as stocks or cryptocurrencies, bonds provide stability, income, and a safe haven for your money, especially during times of market turbulence. Think of bonds like loans that you make to governments or corporations. When you buy a bond, you're essentially lending money to the issuer for a fixed period of time, with the promise of receiving regular interest payments, known as coupon payments, and the return of your principal investment at maturity. One of the main advantages of bonds is their relative safety. Bonds are considered to be less risky than stocks, as they're less volatile and provide a steady stream of income. This makes them an attractive option for conservative investors or those nearing retirement. Another benefit of bonds is their diversification benefits. Bonds tend to move in the opposite direction of stocks, meaning that when stock prices are falling, bond prices may rise. This inverse correlation helps to reduce the overall volatility of your portfolio and protect your investments during market downturns. When choosing bonds to invest in, it's important to consider the issuer's creditworthiness. Bonds issued by governments or corporations with high credit ratings are generally considered to be safer investments than those issued by entities with lower credit ratings. Bonds can be a valuable addition to any diversified investment portfolio, providing stability, income, and a hedge against market volatility. By carefully considering your investment goals, risk tolerance, and time horizon, you can determine the appropriate allocation of bonds in your portfolio.
Alright everyone, there you have it, your roadmap to investing in 2024. Remember, the best investment strategy for you will depend on your individual circumstances, financial goals, and risk tolerance. It's always a good idea to do your research, consult with a financial advisor if needed, and never invest more than you can afford to lose. The key takeaway here is to start investing as early as possible. The power of compounding is real, and the sooner you start putting your money to work, the more time it has to grow exponentially. So what are you waiting for? Take action today, make your money work for you, and secure your financial future.